Gold stayed bullish for the day and has already achieved 1974-75 zone, as we discussed in our Asia and Europe session update today morning. That first it has to stay above 66-67, and then you can initiate a buying position for 70, 72.4, and then 72 75 levels is a very good resistance. Likewise with oil has achieved 78.6 and has reversed since then and has got its support intact at 77.4, 77.6. These levels I have mentioned very clearly. These are very strong support levels. Now, what to expect from gold and crude oil today? Yes, there is lot much of data before the US session itself, specifically which can impact the prices in gold, which is the PPI and the retail sales data. Also, the inventory data for crude oil will definitely bring volatility. So how to profit trading gold and crude oil with the data and the US session, we will see with the help of charts and indicators. If you are new to the channel, do subscribe to stay tuned with the latest updates. I do release twice a day update, first with the Asia and Europe session, and next this is the second update for the day with the US session. So you can also join my free Telegram channel to get the live updates. Now look at the hourly charts of gold here. We will start with gold and followed with crude oil. Watch till the end. It has formed the bottom here. Since then it has rallied. This is a breakout here. First red candle on the hourly charts. And if it stays below 1970, certainly more bearishness will be seen. I will be looking forward to 1964-67 zone and then 1960-62 zone. Yes, these are support levels. I will rather expect it to at least touch the 20 period moving average, which is right now sitting at around 1966, which is indeed a good support. Also if you look at, see, this is a breakout out of the channel, and hence a little bearishness may prevail. Second and third red candle can be seen. Only bearishness is if you see the gold is staying below 1960. That is the time you can say that the prices have reversed. Else 60-62 levels are still going to remain the first support zone, very strongest support zone for the day. Stochastic looking downwards, trying to trade bearish. MACD is on the verge of a bearish cross, and this can bring couple or more red candles from here. RSI looking downwards, it is overbought. Coming to, if you look at 2-hour charts, see the bullishness here. But if you look at, there is a downward pressure as well, and that is where this red candle has appeared, and now it is trying to trade with a slight bearish bias. Once it stays below 70, and then this zone, that is 65-67, more bearishness may prevail here. Specifically, if you look at, the base is created at 1962, and the 20 period moving average is also somewhere here at 1960. So this zone is the prime important support zone for the day. Any drop below 1960 is only the bears will take over, else a possible bounce back can be expected. Now see, moving averages have crossed over here. This is a bullish sign for gold. Stochastic overbought, MACD is in green, and it is trying to converge a bit. RSI is overbought as well. Coming to 3-hour. Now look at 3-hour chart. See, first the preceding candle has the lows at around 1970. Next, it has to breach the lows of the preceding candle and a slightly lower levels. Thus, only and only if, see, first of all, yes, it can show you swings. It can create the double bottom here and bounce back. That is one probability on the 3-hour charts. Second is only bearishness. If it stays below 1968, we can say further drop can be expected, which can take the prices towards 64, 62 and 60 levels as well. Thus, it is crucial for this candle to stay below 1970. See, there are extremely good support. I cannot avoid it, but there are definitely good supports as long as 1960 to 60 is respected. Every $2, every 20 pips is there support for gold. You have to trail it. The stochastic overbought, MACD is divergent and bullish. RSI is near to overbought as well. Coming to 4. Likewise on the 4-hour chart, support here, yes, it is still giving higher low, so it can possibly reverse here and achieve 1977 levels. So yes, once you see the price is staying beyond 1974, you can initiate a buy here for 1977, and then 1980-85 levels. Yes, it can fly towards 85 as well. If it stays beyond 1974, we have to go long, we have to stay bullish in gold today. If you look at the moving averages crossing over here, and the prices are little divergent from the moving average, which is right now sitting at around 1960. And that is why I say, as long as 1960 is there, possibility of a rise will always be there. The stochastic is overbought, MACD is divergent and bullish, RSI is flat near to top. Coming to the daily. If you look at the daily chart, see higher lows, higher highs. Now for the day, higher highs are definitely achieved, but higher lows are little far below. So can it achieve the lows for the day? So far, the candle is green. The candle is still indicating bullishness here. It is not showing any signs of a reversal. Only thing is, once the prices stays below 1960 is where slight bearishness will be seen, and then we can look forward for 1954 and 50 levels. As long as 1960 is respected today, do not treat gold as bearish and do not treat a drop or a crash in prices as long as 1960 is respected today. Now see, candle is green and it is increasing in body size. Previous candle also had a wick and a tail on the downside. This suggests that there is bullishness, and that is what we have seen. Higher highs are already achieved here. Stochastic looking upwards, trying to stay bullish. The MACD, now daily MACD, though it has started to converge, but it is not completely bullish. See, it has started to converge because the divergence was more here, and that is why we can see couple of greener candles. However, after converging, it can again start to diverge. There is one probability. RSI rising as well. So thus looking at this for the day, before I give you the trading levels, if you want to learn this art of trading, you can join my mentorship batch. 27th batch is going to start on 20th of November. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can register by visiting my page www.forexfunda.com. You can pay there itself and book your seats. Also, you can register for the weekly webinar series as well. All the links are there in the channel and video description. Do join my free Telegram channel and the Signals channel if you want to trade as per this. Now, for the day, you can sell here at 1968 levels, but then be very cautious. 68, 65 first, 66, 65 first target, 60, 62 the next target. Below 60, 62 is where the bears will take care. If it drops below 1960 is where the bears will be coming, or bears will be active. As long as 1960 is respected, possibility of a bounce back, reversal and rise will always be there. On the upside, I will recommend you to buy here at 1975 levels. Beyond this, see 1977, 1980 and 1984, 85 zone. These are the three resistances. Only beyond 85 you can say sky is the limit for gold, and it is going to rally high, as possibly it can still show you the swings there. 1984-85 is a very strong resistance on the upside. Even if it tries to rise, these levels should prove out to be a greater resistance and the prices might retrace. Thus take your trades accordingly. Now let's have a look at crude oil. See, oil today has reversed from 78.6, has seen the drop, and it is now willing to rise. There is a data coming in from US, the inventory data. It may probably cause the rise there, and then I will look forward to 79 levels as well. But yes, a buying entry is above 78.6 levels. And as today I had discussed that a selling entry at 78 could have been taken, and 77.6, 77.4 is the support zone. Precisely, it has reversed from 77.4 itself, and I expect it to reverse and retrace a little. In fact, I will expect it to achieve higher highs. So thus beyond 78.6, stay long for 79.2, 79.6 and then $80 levels. Stochastic rising, MACD is bearish, trying to converge. RSI is coming to 2 hour charts, 3 candle with higher lows. This candle is willing to retrace, and possibly this candle may take it towards highs. The next candle, when it starts, if you see it staying beyond 78.6, just stay long. We are looking forward to 79.6, and further to that we are looking forward to, in fact, $80 levels. That is the target today. If it stays beyond 79, 79.6, 80 are the targets here. Rather, I will say, as we discussed in the Asia session update, 80.4 is my target if it stays beyond 79. Stochastic has dropped. MACD is divergent and bearish. That is one cause of concern for me, that the MACD has retraced a little. So it requires a lot much of effort for it to converge from here and crossover for buy. RSI looking downwards here, coming to 3 hour. If you look at oil on the 3 hour chart, see a couple of red candles, lower lows are done. And if you see this, higher highs means 79 has to be there. Yes, first it has to stay above 78.6 levels in order to confirm a rise. Further to that, the bulls will take care and the rise will be there. And if you look at the two candles, see body size is smaller there, so possibly from here it may try to recover. In fact, I will recommend you to buy at 78.2 levels itself. You can expect 78.6, and then beyond that 79.2 and plus levels will be seen. If you look at stochastic, this is flat. The MACD, this is only the cause of concern for me. The MACD has just crossed over. It is trading with divergence, and though the crossover is at a median levels, but still a crossover is a crossover. Hence, it requires lot much of effort from oil to continue on the upside right now. RSI has retraced looking downwards, coming to on the 4-hour chart, see lower highs, lower lows. Thus, it needs to break past by 78.6 levels in order to confirm the rise there. That is the only position beyond which the bulls will try to take over, and hence, as long as 78.6 is there, you have to trade with caution. Stochastic at bottom, MACD willing to cross over for sell. RSI is flat. Coming to likewise on the daily chart, see lower lows are done, and if it tries to recover from here, lower highs which suggest 79.6 levels might get achieved, and in fact higher highs which suggest $80 levels to get achieved here. Thus, once the prices stays beyond 78.6, stay long for 79.2, 79.6 and $80 levels here. Stochastic rising, MACD is trying to converge crossover for a buying entry, and RSI is flat. Thus, looking at this, selling entry is below 77.4 and a buying entry at 78.2. In between these 80 cents, do not trade oil today. And on the upside, first 78.6 is the first resistance zone. It has to break past by in any case. Beyond that is where the bulls will take over for 79 and 80 levels as well. On the downside, below 77.4, 77 is the first support and a very crucial support for oil today. Below 77 is where the bears will be taking over. Take your trades accordingly. Like, share, subscribe and comment. Join my mentorship batch, join my signals channel, join my free Telegram channel and my live webinar. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead.